Welcome to Annuity Speak and Annuity Speak TV. I am your host, Dean Lovett, and I thank you for watching this episode entitled Review of the Lincoln NewDirection 6 Fixed Indexed Annuity. As a quick reminder, earnings rates change frequently with market conditions, so always check for current rates when contracting. However, I have found Lincoln's rates to be consistently competitive and attractive. If you have watched other product reviews, you know that I don't review any annuities offered by carriers with less than an A financial strength rating. The Lincoln NewDirection 6 is issued by the Lincoln National Life Insurance Company, which is rated A+ for superior financial strength by AM Best Rating Services. So we have met our number one criteria. For the sake of discussion, and because most annuities offer slightly better rates, at the $100,000 level or higher, I'm going to assume that you purchase a Lincoln 6 for a single premium payment of $100,000. The Lincoln 6 is a fixed index annuity with a 6-year initial term, which, like all fixed index annuities, allows you to allocate funds among fixed interest and equity indexed accounts. However, two attributes make the Lincoln 6 very different and, to me, very attractive. First, the Lincoln 6 offers a unique index account called the Performance Trigger Account, or PTA, in which you can link your account earnings to the S&P 500 index, such that if the index is flat or even goes up slightly, you are guaranteed an earnings rate today of 5.55%. If the S&P 500 index goes down, your account remains flat and you don't lose a nickel. This differs from most indexed annuities, as you typically receive earnings up to a certain cap. The Lincoln 6 requires only that the index does not go down to be credited with the 5.55% annual rate. Granted, the insurance carrier has the discretion to change this earnings rate once a year for successive terms, but the rate is guaranteed to never drop below 2.5%. Secondly, the Lincoln 6 offers a 3.1% fixed interest rate, which it guarantees for a 6-year period. Typically, fixed index annuities will guarantee a fixed interest rate for 1 year, with the discretion to change that rate in each successive year. So it is highly unusual for the Lincoln 6 to guarantee a fixed interest rate for 6 years, providing much needed certainty in today's uncertain markets. Finally, the Lincoln 6 offers a unique 2-year point-to-point index with a cap of 13.6% today. If you select this index, it means that your earnings may grow up to 13.6% over a 2-year period should the S&P 500 index grow at least that percentage from your contract date to its 2-year anniversary. Like the PTA index earnings rate, the insurance carrier has discretion to change the 2-year point-to-point cap at the end of each 2-year term. However, the cap is guaranteed to never drop below 7% for any successive 2-year period. I'm not sure I'm in love with the 2-year point-to-point index, but the logic to allocate some funds to this index may be the following. If you believe that the upcoming year was going to be a bad year for the S&P 500, followed by a very good year, you might select the 2-year point-to-point cap, and if you're right, it may be a big winner. With all fixed indexed annuities, you have the option to allocate your premium to one earnings account or among various earnings accounts. And remember, whatever you do with annuities can be undone. Nothing is completely irrevocable in which you are stuck with a bad plan or without access to your money. And you can always withdraw 10% each year of your premiums paid without penalties or charges imposed by the carrier. Further, given the different types of earnings methods, you can actually diversify and spread your risk within a given fixed index annuity. At the end of each term, you can reallocate your account value among the various types of earnings methods, With the Lincoln 6, this means funds allocated to the fixed interest or performance trigger account can be reallocated annually. However, funds placed in the 2-year point-to-point index can be reallocated every 2 years. If in less than 6 years you desire more than 10% of your premiums paid in a given year, or all of your money returned, you can do this too. The surrender charges, market value adjustments, and taxes may apply. Without getting too technical, the market value adjustment will increase your penalty or charges for excess withdrawals if interest rates have risen since you obtained your annuity. The MVA will decrease your penalty for excess withdrawals if interest rates have fallen since you obtained your annuity. Also, in the event of a medical emergency in which an annuitant is confined to a nursing home or diagnosed with a terminal illness, all monies can be accessed without any surrender charges or penalties of any kind. The point is, just like other areas in which you may place savings, you can change your mind and do different things with dollars placed in annuities if future circumstances change. There is flexibility. However, ideally, the plan is to keep your funds within a given annuity throughout the duration of its initial term. With regard to payment options, you have many. You can remove all funds after 6 years without penalties or fees. You can receive a specific income payment for a period of 5 years or more until your funds are depleted. You can receive payments for as long as you live. And there are various other payment methods and options. Of course, you always want to clearly designate an annuity beneficiary in the event of your premature passing, as annuities bypass probate and get your beneficiaries paid quickly and directly. In summary, the Lincoln NewDirection 6 is a 6-year fixed index annuity with unique features to set it apart. Number one, the PTA account, requiring only that the S&P 500 index does not go down to capture a very attractive earnings rate. And number two, a fixed interest account which guarantees a competitive rate for all 6 years of the annuity initial term, not just 1 year at a time. Please consult your legal and/or financial advisor before making decisions, and note the disclaimer on the AnnuitySpeak.com website. Remember, all interest and earnings rates noted are estimates based on the date of this broadcast, and you need to research the most current rates. Finally, come back next week and check out the next annuity product review. Remember, don't fail to plan, but plan for prosperity. God bless you.